Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Cameron Dawson briefs from NewEdge. I think a lot of our listeners know the Cameron Dawson line. What has changed for you in the last 48, 72 hours with a reaffirmation of equities?
I think that what got reaffirmed is that we are still very much in an uptrend. What got taken out or changed in the last 24 hours is the risk that the Fed would be hiking rates at some point in 25 or 26. The 2-year Treasury yield got to 4.4%, which is just slightly below where Fed funds is right now. That meant that you were pricing in some risk that we could get to hikes.
I want to talk about the ambiguity out there. It's a microeconomic concept, folks, which is yields go up, OMG, that's bad for stocks. And I've had a number of sophisticated guests like you say, maybe not. Yields a bit higher, there's a bit more inflation, nominal GDP is better, and revenues come in sprightly, like Delta, 4 out of 8 banks, whatever, Cartier in Switzerland. I mean, is this a revenue miss that we're going into in this quarter?
TSMC, Rio.
Well, I do think that we need to make a distinction between what's going on with European luxury and what could happen within U.S. consumer stocks. Because European luxury is benefiting from a weak euro and a strong dollar. If we see U.S. consumer stocks potentially coming out saying, hey, the dollar's really strong, it's weighing on some demand or weighing on our revenues, that could be a headwind. We do think at the end of the day, inflation is good for earnings because inflation allows you to have pricing power, it gives you revenue upside, it gives you operating leverage. So we do think that having a little inflation in the system is one of the reasons why earnings have been so strong.
Cam, it's only January 16th, so forgive me for the baseball reference. Pitchers and catchers don't report until February 11th, but here's my question for you. What inning are we in? I mean, seriously, I can hear people make a case that we're early stage, that we're late stage. Where are we in the business cycle right now?
We've been thinking that we lean more towards late cycle because of your long cyclical indicators like where construction spending is. If you were early cycle, that would not be at peaks. But if we think about where we are from a pricing standpoint, we do have to appreciate that we're going into this year at a much higher valuation than we did the last 2 years. And we think the biggest question for 2025 is whether or not the 2020 peak valuation of about 23 times earnings acts as a ceiling, or if it's just another step along the way to this huge multiple expansion that we've seen the last 2 years.
You know, Cam, let me build on this a little bit. I was looking at U.S. real yields, right? And I was looking at the 2-year versus the 10-year. I was trying to decompose them. And they're telling me two different things. If you look at the move in yields, in nominal yields, much of it can be explained by inflation break-evens going up, at least in the front end. But if you look out to the 10-year, it's a move in real yields and growth expectations. So, you know, I'm trying to kind of reconcile the two. What are your thoughts there?
Yeah, and we also have to add in these fiscal concerns, the potential questions around how are you going to fund the fiscal deficit, given the fact that we're hearing from Bessent today. We know that bills as a percentage of Treasury issuance or Treasuries outstanding is now at 20% or over 20%. That's more than what TBAC, the Treasury Borrowing Authority, recommends, which just suggests that that is a huge question for how Bessent is going to navigate these big deficits. Do we see them do more coupon issuance? Does that cause long yields to go up? Right. Big questions.
Kim, I want you to, you're so visible and enthusiastic about the American experiment. I want you to talk about a gloom crew quieted again, like go to cash, and then I got to figure out how to get back into the market once I'm in cash. What's your take on that?
We do think that you should always see volatility as opportunity. And it's a mindset shift that means that when...
Nicely said, yeah.
When you see volatility, it's very easy for fear to kick back in. And that's when you get frozen, you get that arrested development. So we think if you judge us as advisors, our success is when clients call us when there is volatility and say, what should I buy? Versus saying, get me out of this, I want to sell.
This is so, Damien, I can't say enough. I mean, you're on the beach in Miami, you don't care. I'm inundated on the street, in restaurants, my email, semaphore. I'm inundated with people saying I'm afraid to participate.
Well, I'm going to challenge Brooks Ritchie in a little bit of behavioral finance here, because for me, as we get into January, it's all about positioning. It's all about sentiment, right? And so talk to me about financial conditions. I mean, what is it going to take to knock U.S. financial conditions back again? Just a little bit. I mean, is it going to be, equities coming off here, or spreads? I mean, how tight can spreads go? I mean, talk to us about financial conditions. What are your expectations there?
Isn't it fascinating? So the four main components of financial conditions being yields, currencies, equity prices, and credit spreads. Yields and currencies have all tightened, but because equities and credit spreads have remained so resilient, you haven't seen a tightening in financial conditions, which means we think that financial markets are effectively saying, Fed, you're not that tight. If the Fed was that tight, credit spreads would not be at 20-year tights. If the Fed was really weighing on economic activity in a significant way, you would not see high yield spreads where they are.
What's your call on the market now? I mean, the whiplash the last 2 weeks has been, we're deep into 2025. I mean, what's your call on the market this year?
Respect the trend, but do not ignore the risks. Our call for 2025 is a wide, choppy range.
Okay, we got to run because I got to do bank earnings. You want to do bank earnings with us?
Yeah, do bank earnings. Morgan Stanley, B of A. We'll talk about net interest margins. Come on.
Ken Leon joins us now.
Underwriting.
This is really, I'm honored by this senior analyst, CFRA, with decades of experience. Ken, my basic take, and my audience has heard this from me, the banks are literally sandbagging how much money they're making. They are profit machines. Let's start with a why. Why are these big banks profit machines?
The banks have a much stronger business model today, Tom, than what we spoke about maybe 3, 5, or 10 years ago. They have a blend of great franchises with durable recurring revenue, fees for transactions across many businesses. And then on the upcycle for investing, or really for investment banking, we're seeing the added benefits. So it's almost like putting fuel on the fire, and that's the story for 2025.
Is there a monopolistic tendency here? Is there concentration of revenue, and particularly concentration of profits so great that you are concerned?
Well, we're not concerned, but investors have to be aware, so that when you're investing in the overall market or the financial sector, the 5 global U.S. banks are top 10 constituents. And when we look at these banks, they're gaining wallet share across different businesses. So the answer is yes. Consumer, investment banking, taking wallet share from Europe. Across most businesses, they have dominant positions, but that's a strength for America.
Ken, I'm sitting here next to Gam Dawson, and she's dying to ask you this question. I mean, bankers are claiming that there's just this enormous appetite for capital at current levels. I mean, we saw a surge in profitability, not just JP, not just Goldman, but Wells and Citi as well yesterday.
Even Wells Fargo.
Yeah, I mean, everyone is making money in this market, Ken. Talk to us about B of A and Morgan Stanley. What are you focused on here?
So we took a look at the numbers for Bank of America. They're slightly better than JP Morgan. Loan deposit growth, 3% for both. Net interest income, 3%. In the areas of global banking, very strong across all areas. I think any of these managements want to understate their book or outlook, mostly because it's still early.
This is my big theory. Cameron Dawson with us. We're doing this differently this time. To have Cam Dawson looking at the holistic market and Ken Leon with terrific granularity is really what surveillance is about. Cam Dawson, you're listening to this. Is this a year where you look at Ken Leon's work and say it's a sector acquisition, or do you buy individual securities?
Yeah, we think the financials are set up for success. You have a strong economy, you have a steeper yield curve, you have the potential for regulatory improvement, and you have the potential for a return to business activity and M&A and IPOs. These are all important tailwinds. Just don't forget, the banks are now not that cheap. They're trading at 1.5 times book, which is effectively the peak.
Ken, do you agree? Ken Leon, are they rich?
Yeah, so in November, we put the report out, Stay the Course for 2025. And what strategists don't know is sometimes you can earn into your valuation or higher. So we're going to see upward earnings estimates for the consensus through all of this year. We're overweight the financial sector along with technology and communication services.
Ken, my son was just on the Morgan Stanley sophomore internship last night, and you know what? It's not about net interest margins. It's about wealth management. Talk to us about the $7.3 billion beast. I mean, talk to us about wealth management at Morgan Stanley Q4. I mean, it's got to have been great, right? Not lights out.
It never has these enormous jumps in terms of growth, but they're just steady performers. What they do is they create the story for durable recurring revenue, fee services. And that's good because it's enabled Morgan Stanley in the last year or so to get a higher multiple, getting closer to a BlackRock. So it is a blend with that strong franchise in wealth management. Goldman's coming up for different reasons, which is private equity and private capital will be their new secular growth areas.
I said this the other day, I think maybe it was yesterday, that BlackRock now is even beginning to be folded into the major bank analysis with the success that we've seen. We welcome all of you across the nation on your commute on Apple CarPlay, Android Auto. Good morning, 99.1 FM in Washington. Big events down there. We're going to go to Ethan Bronner in Tel Aviv here in a bit. Good morning, 92.9 FM Boston. Our flagship, Bloomberg 1130 in New York. Good morning. And a first mention this morning, YouTube, humbled by the attendance. Thank you so much. Subscribe to Bloomberg Podcasts. Ken Leon with us with CFRA and Cam Dawson sitting in as well with NewEdge Wealth. Damien?
Yeah, Ken, I mean, look, when I look at the bank of earnings and I try to break in and see what's going on underneath the surface, I look at debt underwriting because to me, that gives me a pretty decent lead on commercial real estate, you know, and we know what the commercial real estate market has looked like, and we know what it looks like right now. There's a lot of debt out there where, you know, borrowers are paying 4%, and they're going to have to adjust to an environment where they're paying 8-9% now. Talk to us about that hurdle. How do they get there, and how are the banks helping them get there?
Right. So for any of the large banks, they mostly have exposure to multifamily, which is more stable. Yep. Commercial real estate is mostly offices at risk. We see it as kind of idiosyncratic for this year and to 2026, which means no big reserves. They already took them. Additionally, the areas to still lend is areas like data centers for AI on a global basis. And overall, when we look at real estate, we're also seeing some deep values. So firms like Blackstone and KKR and others, we'll take a look at it. Brookfield's another one.
Well, Ken, I mean, I'm dying to hear you talk a little bit more about these data centers. You know, my read on it is that the building of data centers accounts for easily 1% of GDP here in the U.S. I mean, Cam, what are your thoughts about, you know, that kind of convergence of, you know, Mag 7 tech and the real estate sector? I mean, talk to us a little bit about what that means for the U.S. economy.
Yeah, Neil Dunham put out a really interesting note yesterday talking about how he thinks it's about a 0.5 percentage point in the last year that tech has contributed, and that you've seen a slowdown in the permits or the initial kind of plans, which is a question of how long can it last.
I got one more question. Ken Leon, to what Damien was talking about there, I think is an important frame. With your research capabilities at CFRA, does Mag 7 expand this year with data center build-outs, with the oomph, the productivity oomph of the American economy? Are we naive in a branded idea of just 7 stocks?
Well, it may not be 7 stocks. Certainly there's some enormous companies that are just below that mark. It's a very concentrated market. It does put a little bit higher risk on equities. If you want to be defensive, of course, Cameron could talk about an equal weighted S&P 500 or the S&P Dividend Aristocrats. But overall, it's the market we're in.
Cameron, I got 22 seconds. Equal weight. It's all the rage now, isn't it? I mean, every other page of Barron's, equal weight. What do you think?
Be careful. Equal weight earnings have grown 9% in the last 2 years. Mag 7 earnings have grown 125%.
This is why Cam Dawson's on, folks. She's got the details. Say that one more time. It's too important.
In the last 2 years, equal weight earnings are up 9%. Mag 7 earnings are up 125%. No wonder it's a concentrated
market. The only
market.
one I know on the street that can do that is Sam Stovall. Ken Leon at CFRA, thank you so much for joining us today. Cam Dawson, thank you as well, particularly for the acuity there.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
We are honored to bring you Michael Nathanson of MoffettNathanson on this horrific moment for Los Angeles. Michael, do you and Craig Moffett have any idea how Hollywood pauses or shuts down or regroups?
Morning, Tom. That is the question, right? This is something that the industry did not need at this point in time, given what you laid out the past 4 years. I don't know how it regroups, right? I don't know, people have lost lives, homes. I just don't know community. I don't know how they could get back to work anytime soon.
And the Hollywood Reporter, Ingrid Schmidt, folks, this is a minor story. Top Hollywood stylists are helping fire victims rebuild their wardrobes. I mean, Michael, pull this over to the industry response you would hope for from people like Disney, like as basic as what do they do with the Oscars? What do you and Craig presume they could do?
I know, it's interesting. I was invited to an award show next month, and I assumed it was going to be canceled, right? And when I spoke to the people who were organizing it, they felt like for the community's sake that it has to go on, right? The show must go on, Tom. I think they will try to get people together in a community and regroup and basically not slow down whatever was on the calendar. I really do. Because you basically need to see people get together and figure out what you can do to help your neighbor. So I was surprised to learn that what I was planning to go to was still on. So I have to believe the show will go on, Tom. I really do.
Damien, please.
Well, Michael, look, you live in Scarsdale. I live in Rye, New York. Yeah. We have friends out west, and my question for you, just, and what you're hearing and what what does your gut tell you? How is LA going to move through this? Do you see migration? Do you see a lot of the wealthy people who are out along the PCH, moving south, moving back to New York even? Talk to us a little bit about what you're hearing.
Well, it's, sadly, one of our partners at MoffettNathanson lives by Brentwood. And they spent some time down south of LA, and he was suggesting that people will move further south, right? Away from the canyons and the hills, maybe closer to the beaches. But so to your point, Damien, you've lost Rye, you've lost Scarsdale. It's that type of erosion of a community.
Right.
And I think it's going to take years for this community to rebuild. And I do think you're right. I think if you have the means.
There are no schools. That's what people like us. Where do you send your kids to school now? What do you do? How do you regroup? It's crazy.
Or church or temple or hospitals.
Right.
It's hard to imagine, but
right.
I think you will see flight. I do. I think people will pick up and move someplace a little bit safer, maybe even cheaper, right? Given the cost of LA.
Michael Nathanson, thank you for this perspective. And we must thank Rob Carolyn, our Bloomberg meteorologist, who's been sleepless for 4, 5, 6 days, perhaps this morning, some quiet and containment out in Los Angeles. Michael, I have to admit, on Friday, I will go home, I will commit the surveillance nap, and then I'm going to get up and watch Silo, the last episode of the season for Apple. Tim Cook is so Silo happy he's doing photo things with the actress who's leading it as well. Is Apple making inroads into the Michael Nathanson world?
Tom, I love their content. They have some of the best shows on TV. I haven't watched Silo, I have to admit, but there's a bunch of other things I watch. They're not making a dent, Tom. When you look at overall Apple's share of time spent streaming, do you want to guess what their share of streaming time is?
It's next to nothing.
It's less than 1%, right?
Wow.
I know, it's 1%. And it's just terrible. Yeah. So when we go to LA to do our visits and tours, there's no one in that town who knows what Apple's long-term plan is and what they want to be when they grow up. It's kind of amazing, right? It really is.
Michael, I'd love to take this in a very different direction. I want to talk about data centers, and I want to talk about CapEx from the Mag 7 and Mag 8. I heard some very, very interesting figures over the past few days that if you look back over the full year 2024, and you look at the Mag 7 and their spending on data centers, and then you assume that banks are providing, roughly 5-6 times the leverage on that, you take that total, that is pretty much 80% of all CapEx for the country in 2024. I mean, does that number, is that right? I mean, is the amount of CapEx that's being spent on data centers, and forgive me, I don't know how much computing power it takes for ChatGPT relative to a Google search. Maybe you can help me understand that. Is this right? I mean, does this make sense to you?
It's a really interesting question. So far, from when we look at Meta and Alphabet, it has made sense because we're in the early phase of the build out, right? And when you look at Meta's results, you can see the benefit of AI in their ad numbers and their engagement. You can see it at Google as well. But to your question, we're at this really interesting tipping point where the cost of CapEx, the depreciation of CapEx, I know it's 9 a.m, but I have to say depreciation at 9 a.m. The cost of CapEx will start hitting the income statements the next couple of years. And the question will be will the advertising revenues, will the subscription revenues from cloud accelerate at the same rate as that CapEx growth, right? That we're entering 25 and 26 will be kind of the test period to see if these investments made sense. To where we are today, it's penciled out, but the full cost of CapEx is barely on the balance sheet today and barely on the income statement today.
Now, talk to us also about like these data centers. I mean, is there a risk that they become obsolete? I mean, look at Office. I mean, Office is obsolete right now, right? No, tear it down in Class C office here in real estate. But, I mean, it is a concern. I know that all the servers, they're owned kind of by the Microsoft who in the data center so they can replace them if they do become obsolete. But just the footprints of these data centers and all the money that's being spent in building these huge, huge structures. I mean, is there any risk that, these things go obsolete in the not too distant future?
It's funny, I was thinking of that this morning when I thought about how much someone like Elon Musk has just thrown into a quick build of a data center in Tennessee, right? How quickly they've done this. You would think logically over time, just the history of technology, things become more efficient, and lighter and cheaper, right? And you would think over time, these will look a bit old-fashioned and archaic to have these massive centers housing all these servers when the speed of change is going to probably produce something much lighter and smaller. I think you're right about that.
Joining us, we thank you for being with us on your commute across the nation and out on YouTube from your home, from your office. Do you know that on a Rivian you can watch us on YouTube in your car?
Really?
I don't know if that's a good thing or not, but that's what somebody told me. Michael Nathanson with us, and we thank him for trenchant comments on the fire, the disaster in Los Angeles, and these comments on the bigger picture as well. Michael Nathanson, what's your single best idea for 2025?
I knew you were going to ask me that, Tom. You ask me that every time.
Besides the Yankees not dropping the ball at the wrong time, what is your single best idea?
Ouch.
Well, how about the Rangers, selling all
We'll
that
get to
talent?
the Rangers.
Blow it up.
Okay.
Blow it up. Outside of Shesterkin, we got
What's
to blow
your
it
single
up.
best idea
Okay,
right
so
now?
basically, my single best idea, and I'm going to punt because the best idea we have at the firm is sports gambling. It's Flutter and FanDuel, right? So my best idea, we've been buyers of Meta and Alphabet for the longest time. Those will still work. They're fine. They're actually not that expensive relative to Apple, which I know you Craig on last week, which is a sell on. So in large cap tech, I'm fine with owning Meta and Alphabet. I mean, it's fine. But the best structural idea will be buying into sports gambling within the U.S.
Okay, so here's what we're going to do, because Damien owns this. We're going to rip up the script here. I'm interviewing Damien Sassower and Michael Nathanson to get to the news here as well. Let me start with Damien Sassower as well. Is gambling out of control in sports because of the addiction that all of us are witnessing each and every day?
Oh, you're asking me a question about
Lisa's
what I think about you're asking me about the morality of sports gambling.
I'm asking about it's grown so fast. Yeah. That's why Nathanson has a buy on it.
I think Nathanson's right. You haven't even scratched the surface of just how far this can go. But here's my question. I mean, Michael, correct me if I'm wrong. We've expanded. I mean, the footprint of gambling hasn't really expanded so much this year relative to last. I mean, what, Calgary? Calgary got sports gambling this year. Maybe Kentucky, I think, just legalized. Like, when does Florida? When does Texas? When does some of these really big states start to come online here? Is that part of your thesis?
Right. So Robert Fishman on our firm covers the sector. And what he's found is that on a per capita basis, even though New Jersey's been gambling for years and New York, per capita spending keeps going up, right? So you may have thought that everyone is gambling and they're spending as much as they can, but we're finding we don't need those states to come online anytime soon. because on a state-by-state basis, there's more per capita spending and the competitive dynamic, right? People started with all types of free bet offers. Those platforms have gone away.
Yep.
It's pretty much a two-horse market, FanDuel and DraftKings.
Right.
So it's become a duopoly, and the per capita spend keeps going up. And Tom, I want to let you know, I have deep concerns about this as a parent
Yep.
and as a citizen, but it's legal, Tom.
Right.
And you know what? People said to me, people have spent Thanksgiving Day watching their grown children sit on a couch betting on Thanksgiving football games as a family activity, basically, you know?
I mean, this
That's
is
how
so
public
important. What have you and your team, Michael Nathanson, learned from England in their decades and almost centuries of really active betting as part of the social culture? I mean, is that where we're heading? We're going to become like, Ira Jersey losing his mortgage on Aston Villa? I mean, is that where we're heading?
Well, it's interesting. The UK has started to put some real guardrails around this topic, right? So the UK regulators are concerned about just how much ease and how much generosity has been given to bettors, and they've put limits on certain types of bets. So right now we're in this phase where it's just unchecked, right? And I have to think 10 years from now, Tom, we'll look back and say, oh, we should have done more on regulatory, right? But we're in this golden age of letting the market decide how much is enough, right?
All right, Michael, enough is enough here. What happened to the Rangers? I mean, seriously, they're playing a bit better lately, but I mean, they're the third worst record in the Eastern Conference. I mean, outside of Shesterkin, I mean, he's just a force of nature. What is going on with the New York Rangers?
It's interesting. So, as you know, we're analysts of firms, and we have to look at strategies and CEO leadership decisions and culture. And I think this is a story about culture, right? I think the GM and the coach lost the room. And as Tom knows, hockey requires intensity and dedication and throwing your body on the ice to block shots, right? And I think they lost the room.
Yeah.
And by trading their captain and getting rid of Goodrow and then getting rid of Kakko, they basically... I think they lost momentum. I really think it's that simple. I really do.
Okay, I got 1 minute, Michael Nathanson.
Yes.
I think I've got this right as a foreigner. The Jets are terrible. The Giants are terrible. The Islanders are terrible. The Rangers are terrible. The Nets lost their worst game since time began last night. What is it about New York sports that makes it so damn bad?
Tom, as a New Englander, I think it comes down to acknowledgement of ownership, right? Like, what did the Crafts do? What did the Boston Red Sox ownership group do?
I mean, he's never coming on again.
I think it comes down to ownership, and we have some terrible owners in New York. I wish we could have shareholder activism to replace all these folks. I really
Michael, I just want to tell you, I'm going to feature your comments on gambling and betting today on Single Best Idea, the podcast. Thank you for the comments on this horror in Los Angeles. Thank you for your comments of what Lisa and I are worried about with our kids in gambling. Mr. Nathanson owns the high ground with MoffettNathanson.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
With the death of President Carter, we looked back at the struggle of the Camp David Accords. The struggle now is far more visceral and in our modern media, including Bloomberg headlines, far more immediate. No one has lived this like Ethan Bronner. He's Bloomberg News Israel bureau chief and definitive on Levant. I hate to say it, Ethan, but me, the amateur, saw this coming. I saw the celebration, 12 hours ago? And now I've got in the last 120 minutes backtracking an immense fragility. Tell me about the cabinet of Netanyahu. Tell me about the Israeli parliament and where they fit into this matrix right now.
Sure thing, Tom. You're showing your experience with your cynicism. I mean, it's not really cynicism, but look, I think that the difficulty is that there are two things going on right now that are slowing the deal. One is that, according to the Prime Minister of Israel, Benjamin Netanyahu, Hamas has imposed new demands and reneged on other agreements, and therefore he's not letting his negotiators leave Doha, the capital of Qatar, to come back and brief the cabinet to vote on it. Now, if and when there is such a vote, it will pass. But there is that. Now, there's the other problem, which is two far-right parties are opposed to this deal. One of them has said it would bolt the government over it. The other has just had a 2 or 3 hour meeting and decided it won't bolt it now. It'll let the deal go for 6 weeks. But if Israel doesn't return to war after that, then it will.
With me today, Damian Sassower, with really great expertise. You know, we could go to Jacob Frankel, the former governor of the Bank of Israel, but there's a linkage here, Damian Sassower, Ethan Bronner's world into just a fractured economy from Cairo up to Ankara.
Ethan, I just want to look a little bit north of Israel here. I want to look to Lebanon because some fascinating things are going on. It's the best performing bond market on the planet here in 2025. They're basically in talks to restructure $30 billion worth of bonds after their most recent election. Talk to us about Israel. I mean, the two-prong fight, Hamas and Hezbollah, they look north. What are your thoughts there?
No, I mean, you're absolutely right. I mean, that's the sort of that's crazy business that it is that if these deals can go forward, there is an enormous amount of money ready to start investing. Israel is, by the way, as soon as there was a notion that there would be a deal here, Israeli assets started to go up, including the shekel. So you're right. And, you know, there is this very, very delicate moment in Lebanon right now where we're perhaps in a post-Hezbollah moment. It's hard to really know. It's hard to believe it. But if we are, then perhaps we could enter a post-Hamas moment in Gaza. But, you know, the betting, I would say, it would be probably in the other direction. I mean, it's not been a great period for the region.
Well, Ethan, rates, you know, FX, I mean, you're right in my wheelhouse there, but let's talk about commodities. I mean, Brent crude up 9% year to date. The Bloomberg Energy Index is up over 10% this year alone. Obviously, a lot of that has to do with the ceasefire arrangement. If it doesn't go through, can things just, you know, snap back that quickly?
I don't know. I really find it hard to believe that there will not be a deal, to be honest. But, you know, there's so much hesitation right now in Israel that it makes me worry that it could fall apart.
What is the Trump constituency in a complex Tel Aviv and Jerusalem among the cabinet? Ethan, I'm making a joke. The 14 parties of Israel. What is the Trump constituency within the people of Israel?
Well, what's really interesting about that, Tom, is that this is one of the few countries in the world that wanted to vote for Trump if it had a vote in November. It was 70% pro-Trump. Now, what has happened here right now since this deal is that the far right is feeling betrayed by Trump, and the left is embracing Trump because the far right thinks that they're giving up too much. And this is true, by the way, of conservative Jews in the United States, Commentary Magazine and so forth, who are saying that Trump has betrayed Israel by pushing for this deal. That is not how the center and left feel. So it's a really strange situation.
We have to leave it there. Ethan Bronner, thank you so much. And thank you to Alyssa Odenheimer and Dan Williams for their journalism out of Tel Aviv today. The headline, and let me tell you, this may not be the headline in 20 minutes. Israel says new demands by Hamas, casting doubt on Gaza deal. We'll stay abreast of that through the day. And I know David Gurin, the Big Take, focused on it with a good effort in the last 12 hours as well.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
It's a daily look at the front pages. Lisa, what do you got?
Well, we talked about this yesterday, but we didn't get into in detail because we had a ton of bank earnings. We had CPI. It was a crazy day yesterday. But this is about the FDA banning artificial dye red 3 from being used in food because it's being linked to cancer. I mean, this is something that's used in like candy, cold medicine, some drugs as well, baking decorations. But what's crazy is that 30 years ago, the FDA banned this from being used in cosmetics because they found that tumors linked to the dye in lab rats. I think the difference now is there was this provision that kind of pointed to different things that cause cancer in humans. So it kind of a provision change. So that's why they changed it going forward.
And I did, Damien, what you would do. I went and looked at those fancy overpriced cherries I have to buy for Manhattans, and I was comforted. They're completely free of red dye.
Well, Tom, it shows what I know. I thought it was banned 30 years ago. I didn't know it was cosmetics only. I mean, if you can't put it on your face, how are you allowed to eat it?
Why would you eat it?
Right,
I know.
exactly.
It doesn't make any sense.
And yet it's in so many different things, right? I mean, from sprinkles to, I don't know, you tell me.
So much. Morningstar
Cereal.
Farms plant-based bacon strips. I know, Tom, those are in your fridge. So the plant-based bacon strips, okay? So you're going to have to take them out. But this is just the beginning. It goes beyond this because they're looking at red number 40. Like, it's going to keep continuing. So, which is a good.
Next, what do you got?
Okay, so Google signed this deal with the Associated Press to deliver up-to-date news through its Gemini AI chatbot. The reason this is big is because this is Google's first deal with a news publisher. So nobody's saying how much Google's going to pay AP for the content, but you'd start to notice a lot of these news publications. First, they were starting to license their information to train these AI systems, and that was a big deal. And even
Damien, where are you on this?
Speed over accuracy, Tom. It seems there's a focus on getting the news to people quicker, regardless of whether it's right or wrong. So I think, there's going to be some sacrifices and some bumps along the road. But if X is any indication of where we're headed with that, I think we should expect more of the same from Google.
Yeah, no, most definitely. And they even talk about this like going forward with entertainment. Like, is entertainment going to start licensing movies and films to these AI companies? That was talked about with Lucas Shaw recently.
It's all nascent. I mean, nascent, we really don't know where we are right now, right? Okay.
That's true.
What else do you have?
Okay, so Super Bowl, right? Big time for commercials, but State Farm pulling out their ads because of everything that's going on with the Los Angeles fires. They're saying they received over 7,400 home auto claims. They're putting tens of millions of dollars back into the customers' hands. And they expect that to rise because as more residents start to go back and assess the damage that's happened to their homes. But it's like a spotlight on the insurance industry, how companies have been like pulling back from California.
Really difficult. This is going to be fascinating to see. Instagram's been very strong on this. Different people talking about the tragedy that we're witnessing. One thing that would help would be LA strong. Are the Rams, Damien, are the Rams in the game? Like,
the Rams are in the game, but I want to be very serious here for 1 minute. We were at Crefsey. We were talking about, the LA wildfires and what does that mean for migration patterns out of LA? I mean, think about where people are obviously going to go. They're going to try and first go south. They're going to go to Newport Beach. They're going to try and go to San Diego. But then where do they go when they can't afford that and prices get ramped up, right? Do they go to Phoenix? I mean, do they go to, they come back to New York? I can tell you this, Tom, a lot of people are not staying in Los Angeles after this one. I think you're going to see some migration outward.
Yeah, well, it's under discussion.
And by the way, we're not going to get Danny DeVito and Arnold Schwarzenegger on the Super Bowl either. So, come on. What are we talking about? Wasn't that the big State Farm commercial last year during the Super Bowl?
Yeah, it was one of the top rated.
Yeah. We're doing, in honor of Damien, tanned and rested. Lisa Mateo, thank you so much for the newspapers today.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.